And one of the big winners of 2023 is Medicure. Stock has surged 60% this year. In fact, for this year, FY24, the company has further raised their guidance to 20 to 24% and 25 to 27% on margin. Himanshu Baid, Managing Director of Medicure, is with us on the show. Mr. Baid, thank you very much for joining in. Can you give us an indication of how Q3 has been for you and the visibility for Q4? In the first half of the year, you were anyway tracking growth above your guidance at 26%. Now that we're almost done with Q3, do you have the visibility to beat your guidance for FY24?
So I think I would say that we'll be on track to deliver the growth which we have promised. And I think when the new plants go online, and I think two of the plants already gone online, 2 more would be ready by end of this current financial year. So we will have no added capacity, and probably that will also take us further to newer growth in FY25. So we'll stay on track, what we have committed.
Right. Mr. Baid, hi, good morning. Give us a sense of the size of the opportunity for you. Is it just about capacity? I mean, you are already the largest, maybe also the most profitable medical equipment company out of the country. What is the size of the opportunity? And 70% of your sort of revenues are exports. You know, in terms of the number of products that you're in, the SKUs that you have, at this stage, what is the size of the opportunity for you as you look into F525 and beyond?
So I'll divide the bucket into 3 parts. One is India. So I think in India, we see the healthcare industry going around 12 to 15%. And I think medtech would go much faster. So here we see a growth of maybe around 20 to 25% or even higher as we get into more hospitals and as we go deeper with our relationship with existing clients. So India, probably we have covered 1/3 of the market right now. So 2/3 is still, which still needs to be covered. And we are trying to aggressively, pitch ourselves in that zone. When we look at exports, I think US is just opening for us. So that's a bigger opportunity for us going forward in the next few years. Europe is 1/3 of our revenue. So Europe continues to be a very big opportunity for us. And I think we have seen a tremendous growth there. I think in first 6 months, we have grown over 30% in Europe. And I think that trend should continue for next years. So overall, I think exports looks pretty good, and so does the domestic market. And the size is quite big because domestic, as we just heard an announcement from Honorable Union Minister, Mr. Mandavia, that the industry is going to go to around 50 billion from a current 15 billion. So by 2030. So that's a big, big market, which is going to open up for manufacturing, exports, and also, domestic market is going to grow at a very high speed.
When you said for India, you addressed 1/3 of the market. You mean you are in 1/3 of the hospitals? I mean, you have relationships with 1/3.
Yeah.
That's what you mean?
Yeah, that's what I mean. That's what I mean.
Okay. So, import substitution, make in India, these have been big themes which the government is encouraging in a very large way. Now this is one sector which I believe perhaps should be ripe for it, right? Because this is also a very large area of import, I would imagine. So,
yeah,
but do you have? Are you present across product categories, or are you? Will you have to expand and innovate a lot more?
No, I think we'll have to expand and innovate a lot more. But currently, we have a good position in our infusion vascular market or renal market or transfusion. So we are also getting into now cardiology and critical care. So these are 2 new segments which we announced this year, and we would get deeper into these segments also. So the market's quite huge. We still have probably neurology, urology, gastroenterology to cover, and in that space also there are consumables used which cut across the current product range we manufacture today. So there's a lot to do actually in next 5 to 10 years. A lot of areas to grow, a lot of products to make in the country. So a lot of opportunity exists for actually everyone.
Mr. Baid, hi, good morning. I just want to get a sense of the margin profile, not in the near term, not the next 1-2 quarters, but more from a medium term perspective, and what we can really expect, given that you are present both in the international markets and the India market, and your business is far bigger internationally. So how does pricing work? Do you get better pricing in your overseas export markets? Also, as we look at more product complexity, more launches, What is the expectation? Can margins move northwards of this 25 to 27% band that you've been guiding for so far?
See, I think when we look at international markets, the cost of doing business is slightly lower for us because we don't have too much feet on the ground outside India. So it's more B2B. So here we have a better margin profile. But when you look at India, so we have around 350 to 400 people on the ground. And also they are going to hospitals and promoting the products there. So the cost of doing business in India is slightly higher comparatively. But I think as time progresses, as we get into more value-added products, I think we will see some improvement in margin going forward. I can't guide it right now, but because we are in the development phase of two new divisions, which are going to be very, very critical for the company going forward next 4 or 5 years. But in my view, we will continue to stay in that 25 to 27% zone for next few years.
Can you tell us more about these two new divisions, the two new critical divisions that could perhaps be margin accretive as well?
Yeah, so basically, cardiology is something which we're getting into is intervention cardiology. So a lot of products, catheters and guide wires and which are used currently imported into the country. So that is what we want to manufacture here. And also there's a great potential to export these products out of India. So that's where we decided to get into this business. And later on, we will also get into more structural heart and other things going forward. So that's one area we are focusing on right now. And the other area is critical care. And basically, these are products used in intensive care units. So we have seen that the percentage of intensive care units have increased post-COVID. Most of the hospitals were probably working at 10% ICU beds, now between 15 to 20% ICU beds. And I think there also we see a lot of potential. And we are developing devices to cater to even the critical care segment.
And when will the revenue from cardiology and critical care start accruing to the company?
I think from the next financial year. So
FY25.
Yeah, so we are in the initial launch phase, but in FY25, we should be able to see revenues coming from these two divisions also.
And the number of devices that you're launching for, say, cardiology and critical care, what would be the overall size? What would be the market that you are initially targeting in FY25?
So the market size in India itself is around 1,000 crores for intervention cardiology products, which we are going to launch. So we're going to probably start with 5 to 10% market share in a couple of years, and then that's how we're going to grow the business. And critical care is also around similar size, but I think the bigger opportunity is even for exports. So once we have our regulatory approvals for exports to Europe and to other markets, I think that is where we're going to see a big ramp up. And probably that would happen in FY20.
Okay, and how long does it take for you to get the regulatory approval to go ahead and export? So your products will be ready for sale, say, the end of, say, March, April of, 2024, so you can sell it in FY25. But how soon before you can export?
So I think typically these are all critical care class 3 devices. And, it takes almost 1 to 2 years to get, EU approvals and, other approvals for other critical markets. So we think that in 2 years, we should be able to start exporting these products to regulated markets. Unregulated markets, probably we could, which is probably India and around, Southeast Asia, which is fairly easy to get in, probably we'll start exports in maybe by end of 25.
Just two more questions, sir. One is, sorry, I think you mentioned a margin number. Can you repeat that? And growth for the next couple of years, what should we expect on the top line?
See, we have not guided for FY25, so I'll refrain from that. But I think we have seen the momentum already in FY23 and 24, and hopefully we'll continue a similar momentum, going forward, because we have invested in a lot of new manufacturing infrastructure, and I think that is going to help us to, continue with that current momentum which we have of around 20 to 22%. I think that will continue with that momentum.
20% revenue growth and margin, sir?
So margin between 25 to 27% is what we are guiding actually. And I think that's the momentum which we are seeing right now. And I think that momentum should continue.
And just one thing, US is the big one, right? Where you're just getting started. And that is the most profitable medtech market, of course, as well. You got approval for 2 categories of infusion therapy products there. So what should we expect? I mean, it's going to be a very slow ramp up because how difficult is it to crack it? Do you have the sales team there on the ground? Do you have, everything going there?
So we have developed B2B relationships in the US market. We are working with some large companies there. And I think it's a start. And I think we've just got our approval, FDA approvals last quarter. So I think we have just shipped few products, and we are waiting for market to react to those products. And once, we get more visibility there, I think, and we are probably also applying for 6 to 7 products more for US FDA. And we hope to get them by end of 24. So totally the basket would have 8 to 10 products. And I think that will become a significant play for us in the US market going forward.
Okay, all right, got that. We will leave it on that note. Mr. Baid, thank you very much for joining in. Good luck with your plans, and we wish you a very happy, prosperous, and progressive 2024. Thank you for joining in today.
Thank you very much. Thanks. Same to you guys. Thank you.
Thank you. All right, back to the